In this week's analysis, we're going to be taking a look at gold, crude oil, EUR-USD, and the DXY. So in this video, the DXY is going to be one of the most important charts to pay attention to, right? Because it's going to determine how major currency pairs, perform this week. So please pay attention to the DXY chart if you trade currency pairs. And if you haven't gotten our, free playbook on chart patterns, check the link in the description below. Get our book. It's going to help you a lot to navigate the market and spot high quality setup. So it's called the Chart Pattern Playbook. I wrote this book about a month ago. If you haven't gotten that book, use the link in the description below to get that book. You'll be doing yourself a huge favor. So without further ado, we'll start with the gold chart on the 1 hour time frame. So last week talked about the possibility of price taking out this area of resistance, and I think on Monday, immediately after the market opened, we had this nasty solid sweet breakout, and I believe everyone who watched the video last week must have taken advantage of this move to the upside. I took advantage. I made some profit, but I didn't take all of my profit, right? Because I actually was holding to all-time highs. But that being said, I took out some profits, and now we've had this nasty bearish move to the downside. So here's what I think. Two things are likely going to happen, right? So we're going to see gold range within this area of resistance and this area of support. So we're going to see price range within these levels for quite some time, maybe a few days, as the case may be, before we get a proper breakout either to the downside or to the upside. For me, I still think gold is bullish, and I'm watching out for opportunities to go long rather than going short. So I'm going to show you my bullish case scenario. So bullish case scenario, first one will be waiting to see if price comes all the way down into this area of value. So previous resistance possibly going to turn into a support now, give us some sort of a bounce, consolidation, right, followed by a breakout signifying a reversal. This will be my confirmation to go long. So something like this. So it may turn out to be something like this, whichever or however the pattern gets formed. I'm going to watch out for a bounce over this area of value, get a pattern, and a breakout to the upside. So my entry is going to be after the breakout over here. So for a tighter risk to reward ratio, stop loss is going to be underneath that consolidation. First take profit target as we go higher is going to be around here. Second one is going to be around here. And if I have more positions left, I'm going to trail them till we go to all-time highs. So this is my first bullish case scenario for gold. Mind you, things may not play out exactly like this, so that's why I have another bullish case scenario. Meanwhile, before we go on to the next one, if you pull up the moving average, right, I like the moving average, 200 EMA and 200 SMA on the 4 hours time frame, right? This price action, if price moves as I expect, then you would see price bouncing off of the 4 hours, the moving average on the 4 hours time frame again, just as we did here, though we traded slightly below it for a couple of days. But right now, I'm watching out for this bottom, right? So to create a U-shaped bottom, like a cup and handle bottom, right? Which would eventually bounce off of the 4 hours time frame, moving average on 4 hours time frame, and also this area of value, which gives me a solid confluence for a good bounce. And if we get a good bounce and a breakout from the consolidation over here, I'm going to go long. So that's one of my base case scenario to go long on gold. Meanwhile, my second case scenario to go long, just in case it doesn't play out like that, I'm going to wait to see how price reacts within this range, right? So we're likely going to get, price consolidating, going down. Maybe we may not go into this area of support, go up, go down. But the moment we take out this area of resistance over here, this will be my confirmation to go long. So if we just slowly, chop sideways within that range, so if we chop slowly within this range, then I'm going to go long if we take out this area of resistance. Sorry, area of value. So it's going to be an area of resistance right now because it was support before, now turning into a resistance. So if we take out this area of value, I'm going to go long, right? Entry is going to be above the consolidation. Take profit target obviously is going to be here. Stop loss is going to be underneath the consolidation that leads to the breakout. This is my second case scenario to go long on gold, right? So it's going to take a lot of patience for us to get a good position on gold this week. So I implore you guys, please be very, very patient. Don't just jump in because you feel like, oh, market is going to go this direction. There's no guarantee as to where market is going to head, but this is my thought process based off of my bullish case scenario. Now for a bearish case scenario, it's going to take a lot to convince me that we're going lower before I go short, right? And that will include going to the 4 hours time frame. So I'm not going to base my short position on the 1 hour time frame. So 4 hours time frame first. moving average, we have to trade well below this range. So the 4 hours time frame moving average, 200 EMA and 200 SMA. I want to see a solid move into this area of value, consolidate properly. So a good consolidation, right? Followed by a bearish breakout. This is going to be my confirmation to go short. If this doesn't happen, I am not going short on gold, right? I'm just telling you my approach right now. If this doesn't happen, there's no way I'm going short on gold. If I want to go short, I'm probably going to maybe catch a scalping opportunity within this range, just quick short positions, and that's very risky, right? So I may not do that, but that's what I'll be doing if I want to go short at all. But for a more solid, substantial short trade position, I'm going to be waiting for a consolidation into this area of value. So this area of previous resistance now possibly going to turn into a support, which coincides with a consolidation within the range of the simple moving average and the moving average, exponential moving average on the 4 hours time frame, so 200 on both, and a breakout from those levels, also from this trend line. You can see we have these higher lows here. So if all this happens and we do get a breakout, then this would be a very convincing opportunity to go short, in my opinion. This is the only reason I go short for a solid trade positions, right? Excuse me. So I'm going to go short there. Stop loss is going to be above the consolidation, at least the breakout. Going to be a little bit wide. Then first take profit target can be as low as these price levels, right? So something else to watch out for. The reason why I'm even more skeptical about going short on gold is because if you go to the 6 hours time frame, then you notice that the moving averages on the 6 hours time frame is slowly creeping upwards, right? So hopefully by the time we get this consolidation to get a good breakout from this line, this 6 hours moving average might have come all the way up to these price levels. And if this happens, this is going to be a killer short trade position, in my opinion. Like, it's going to be fucking crazy. Excuse my language. It's going to be really crazy. Why? Because we'll be taking out the moving average on the 6 hours time frame, which is one of the most reasonable price levels right now, holding gold as a solid area of support. If this happens, we're going to take this on the 6 hours time frame. We are going to take out the moving average on the 4 hours time frame. We are going to clearly break this structure, this area of value, and we are going to take out this trend line. So this is going to be a very solid opportunity to go short if this indeed happens to, you know, play out as I expect to go short. So this is the only reason, the only way I go short on gold is when I get a confirmation that indeed this bullish trend is over, and I'm going to get that if everything I just explained plays out as I've explained, right? But if that doesn't happen, I'm simply going to watch out for my bullish case scenario for an opportunity to go long, because it means the trend is still very much alive and we're likely going to see bounces, especially now that we have more uncertainty coming from the US after the Fed reopened, right? So there's so much uncertainty right now, and the best place for investors to park their assets, to save their assets, would be, in gold, right? Because it's the most safest store of value right now, you get, with less volatility compared to other assets. So that's the reason why I'm going to first focus on my bullish case scenario, right? Consolidation, then bam, bounce to the upside. Or if this breaks to the downside, watch my moving average, my moving averages on 4 hours and 6 hours time frame. Watch the area breakout. Watch out for volume. Then I go short. But meanwhile, other than that, I'm going to watch to see how trade reacts within this range. So within this range, and if we do get a bullish breakout, either from these lows up or from this area of resistance, then I'm going to go long. That's it briefly for this week's analysis on gold. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you agree with me, let me know why in the comment section down below. If you disagree with me, also let me know why, so I could, learn from you, maybe adjust mine, or even do another review within a week. Who knows, right? So just leave your thoughts in the comment section down below. And if you haven't gotten that book yet on our chart pattern playbook, get it. It's going to change your trading game if you want to be a patient trader who looks for high value setups, right? Moving on, we're talking about crude oil. So crude oil on the 4 hours time frame, we have a clear channel, right? A descending channel. The reason why I'm doing this analysis is not to show you an opportunity to go long or go short. I'm doing this setup to show you that it's time to be patient with crude oil and probably even stay out of the market because we are currently in no man's land. No man's land means there's no telling whether we go up or we go down, right? Yes, I know this is clearly a bearish trend, and I told someone in our Discord a while back that I think crude oil is just going to chop sideways like this. It could just do this, right? And this is just an opportunity to wipe traders out of the market because there isn't any clearly sustained area of value right now. Only way you go long would be waiting to see if crude oil comes to the higher bounds of the channel, right? Maybe retesting this area of resistance, getting a consolidation, then a possible breakout to the upside or a bearish breakout to the downside. And this is going to take a while to happen. But while crude oil does this, goes up, comes down, goes up, comes down, it's best to stay away because you're just going to get chopped off. Right? So there are no clearly defined area values right now to place stops because even if we are going down, right, the trend looks bearish, right, on a 4 hours time frame. So even if you're going to go down, where are you going to go short? How are you going to go short in this type of structure or this type of price action, right? So even if you go short here, for example, price could pop up, wipe out all your possible potential stop loss and still go down. And after price breaks your stop loss, it will still turn out to be a good trade, right? Just timing is a bit off. But right now, there's no way to time this thing because it's crazy, right? It's just pausing like this machine you use to check heart rates, and it doesn't make any sense. So for me, if you're trading crude oil, now is the time to be patient, stay away from the charts for now, and just watch. It's best to be on the sidelines right now. Okay, but if we do get a pop into this area of value, so let's say we get a move like this and pop into this trend line, then this would be a very good area of value to pay attention to see if we get a breakout to the upside or a bounce to the downside. But I don't think that's going to happen this week. If it does, I promise I'm going to make an emergency video reviewing this chart and giving you a potential opportunity to go long or short, or I'm going to make a post. You know, we send out posts weekly on our YouTube. Just check the post session, you're going to see some charts. So if that happens, I'm going to update this, but for now it's best to stay away from crude oil, right? Because there's nothing giving us any clue, any hint as to, you know, where to go long or go short. And this is the 4 hours time frame. So if you even go to the 1 hour time frame, it's even worse, right? Because you can see you can't even pick a clear resistance, you can't pick a clear support, you can't pick a clear pattern. So even if you do this, so let's say you do this, for example, you want to wait for more consolidation, there's still so much room up, right? So even if you do this, for example, you want to go aggressive, it breaks out, there's enough room for this thing to run up before it dumps down. So that's why it's best to stay away from the crude oil chart at the moment and just watch out to see what the market does before you take any trade or any action in crude oil, right? Moving on, we'll be talking about EUR-USD. So EUR-USD seems like a very decent chart in my opinion, and I think this would have gone up a lot already if not for the fact that the DXY has been so unstable and unpredictable, right? So crude oil charts, bearish channel, we seem to have had a good breakout from the channel, but if you look at the structure, it still shows that we are in a bearish trend because you see price creating lower highs and lower lows. Mind you, this is something you are going to learn in that playbook. If you get the playbook, you're going to learn exactly what I'm talking about right now with regards to chart patterns, right? So structure still shows a bearish market structure, but the channel has been broken to the upside. Now, this is on a 4 hours time frame, focusing only on this part of the chart. But if you zoom out, you will notice that this is still in a macro bullish trend because overall the trend is creating higher highs and higher lows. You can see higher lows, right? This one is even a higher low and higher highs. So this could just be a bullish flag continuation with a good breakout now. So who knows, right? But you take it one step at a time. So there's no need to rush or make assumptions. We take the price action one step at a time based off of what we can see on chart. So for me, to go long, I want to see if we get a bearish move into this area of value. So if we get a move into this area of value followed by a potential bounce, then this could be an opportunity to go long. A very, very good opportunity to go long. And I don't trade currency pairs, but if this happens, I'm going to try as much as possible to put in some positions on this because I think it's going to be a good opportunity to go long. Besides, the risk to reward ratio will be crazy. The reason is because if we get a bounce off of these price levels, you could enter immediately after the bounce, right? Stop loss can be underneath the bounce. First take profit target can be as high as this price level. Second one can be as high as this highs, right? So if you take a measured price movement, this will give you a risk to reward ratio of stop loss approximately 25 pips, first TP 125 pips. So this is already a risk to reward ratio of 1 to 5. Then if you go as high as this price level, this is a risk to reward ratio of approximately 1 to 10 or more. So that's why if we get a price dump into this area of value, I'm not going to think twice. I'm going to jump in because the risk to reward ratio is astronomical, right? It's crazy. So this will be a very good opportunity to go long, in my opinion. But if that doesn't happen for those who trade currency pairs, you have to be more cautious because of what the DXY is doing, which we're going to talk about in the next charts, right? So it's best to wait for a consolidation. So this is a 4 hours chart, mind you. Good consolidation, right? Good consolidation followed by a good breakout to the upside. So like this and like this. So this is something that could happen if you intend to trade EUR-USD. So don't rush, be patient, see what happens, and let the market show you its ends before you take advantage. So if this happens, this could be another good opportunity to go long, right? So you can go long here. You can go long here after the break of this consolidation, because this will turn out to be a bullish continuation pattern. Once again, check out that chart pattern playbook for bullish continuation pattern. You're going to see exactly what I'm explaining right now, right? So this could possibly create a symmetrical triangle. It could create an ascending triangle. So whatever the chart pattern forms and it gets a bullish breakout, this signifies that a bullish move, bullish continuation, breakout of this channel, upside movement, right? So this will still give you a tighter risk to reward ratio, but I'm rooting more for a retest of this area of value and a bounce for us to go long. So this is my bullish case scenario on EUR-USD, and a lot of these I just explained depends on what the DXY does this week, and we're going to talk about the DXY in a minute. So that's my bullish case scenario for EUR-USD. But if this turns out to be just a fake out or a continuation of a bearish movement, because sometimes lines are just lines, right? So channels are just channels. Just because we have this channel here matching or flowing with these highs doesn't mean it's a very strong level. But I can see the solid volume candle here, which should signify that market's about to go higher. But for a bearish case scenario, we want to watch out for a price dump into this area of value, consolidate a little, then break to the downside. So this would be a good confirmation to go short, and for me, I might even take advantage of this one, right? Because then you can enter here, stop loss can be placed around these highs, first take profit targets can be placed around here, and second one can be placed around these lows, right? Very, very realistic. So this is something that could also happen, which also depends on what the DXY does. And another thing that makes me feel like this could be the case is because you can see the RS on 4 hours time frame, we just cleared the oversold level and we seem to be coming downwards. So if we get a nasty move with the DXY this coming week, this could lead to more price decline, right? So this is a bearish case scenario for EUR-USD, and I don't want you to feel like, oh, we broke out from this channel, why is price going down? It's just normal. If you understand market structure, you will understand that this is still a very good bearish trend, even though we've taken out this channel. At least not until we put in a higher high. So let's say we put in a high that's higher than this one, then that would signal a potential change in trend. You would understand this if you get that chart pattern playbook. Meanwhile, when you get the book, click the link, confirm your email, and that's it, right? So this is my bearish case scenario for EUR-USD, and I think I'm going to take advantage of these two if it happens like this. So whichever happens with the market, I think I'm going to take advantage of the EUR-USD chart. You can see I already have an alert set here, right? So just in case price comes to this level, then I'll be ready. So lastly, we'll be talking about the DXY. So DXY, like I said, one of the most important charts if you trade gold, if you trade currency pairs, especially the majors, right? So last week I talked about the possibility of a reversal into this area of value, which was as a result of the rejection from this area of resistance. Right now, the reason why we are seeing this crazy, nasty movement across majors this week is because we've had a good bounce from this trend line. So you can see this high cuts through this high. we've had a good bounce from this trend line, and on the 4 hours time frame, we have our 200 EMA and SMA acting as a solid area of support. So the moving averages on the 4 hours time frame is acting as support. This trend line is acting as a support, and price just tapped into the oversold level. So there's a good chance the DXY pumps this coming week. So there's a good chance it pumps all the way up to these highs, possibly even breaking these highs and going higher. If this happens, then expect EUR-USD to tank based off of our bearish case scenario as I explained earlier, right? If this turns out to be the case, a bounce of the moving average, a bounce of the oversold level, a bounce of this trend line, so many solid confluence, right? Which means there's a good chance those things happens as I've explained. There's a good chance gold, right? There's a good chance gold turns out to go bearish as I explained earlier. There's a good chance EUR-USD turns out to, take out this area of value to the downside. Very good chance if DXY moves like this. On the contrary to that, if the DXY consolidates, so let's say this small pump right now is just a consolidation, right? It consolidates a little, we may get unsteady or volatile market conditions because market is deciding what's going to happen, and then turns out to go down like this, which I think is likely the situation, right? Likely what's going to happen. Then expect EUR-USD to fly even higher. Expect the reverse effects across major currency pairs, because this will be taking out the 4 hours moving average on the moving average on the 4 hours time frame, also this trend line, and this continuation will just simply be a bearish continuation pattern, right? Once again, patterns, chart patterns, continuations, that book is going to help you decipher this stuff. You get? So just, it's free, you have nothing to lose, right? So that's it for this week's analysis. That's my setup. If you're trading currency pairs, especially the majors, pay attention to the DXY because it's going to determine what happens this week across major currency pairs, right? Across EUR-USD, GBP-USD, USD, JPY, AUD-USD. If you trade those stuff, just pay attention to the DXY, right? Because it's going to help you navigate the world of currency pairs this week. That's it from me, guys. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you disagree with me, please also leave your thoughts in the comment section down below. That's it from me, guys. See you next week.